Good day, Jeffrey Friedman, Senior Market Strategist, RJO Futures. Today's the 12th of September, the second week of the month. I always give you the word of the day. The word of the day is going to be Feds. Next week, Tuesday, Wednesday, two-day meeting of the Fed. We'll see if they have any change of plans. The phrase that you probably want to look at going into next week or when they make their announcement is considerable time for low interest rates. Okay, if they take that phrase out, that would be very hawkish and people would get very worried. This week, to give you an example of why that would be so important, this week alone is the first week in 6 weeks that it looks like on a Friday we're going to close lower for the week unless something dramatically changes. Most of the reports are out. We are slightly lower. We could rally back up a little bit. Last week, the September contract closed around, I want to say 2005 or 06. We're around 1990. We're around 15 points lower for the week. It's on a percentage basis. It's not all that much, but we are lower. We've had 5 weeks in a row. We've made new contract highs. We're in a 5-year bull market. The trend is your friend. But have looked at that. Some of the minor reports that have come out, and maybe they're not so minor, would be retail sales beat the street. Consumer credit has increased. That's a negative in case you didn't realize. That means people need to go into credit, okay, to keep their lifestyle intact, if you will. Consumer credit. They were making a lot of money. There was an expansion of income and spending, okay, income. They would not have to increase credit. Other things that you might want to be looking at, Michigan sentiment. The mood of the consumer actually was better than last month. So that was a little surprise today, and that might help make the market rally slightly. But the big concept is the word of the day. Next week's Fed, in my opinion, I could be dead wrong, most or half of the rally in the last 2.5 years has come from dovish central banks, United States, Japan, Europe, China. So we're getting central banks to help with equity momentum globally. Okay, so keep that in mind. Now, have said all that, okay, one note to keep in the back burner is that the dollar, our currency, in a basket of other currencies, and I know I'm supposed to be talking about equity or future to the stock indexes, but the dollar index future is working on a 9-week rally, okay, without a pullback, and that has, I don't think we've seen that for at least 10 to 14 years, this strength so quickly and consistently. So keep that in mind. Now, let's take a look at the technicals very quickly. We're around 1990, give or take. We're down 6.5 points for the day. Last week's close was around 2010. So we need to get up there or we'll have a lower close for the first time in 6 weeks. Trend reversal point, in my opinion, looking at the charts, would be around 1955. A close underneath that. That probably will not happen today. It could happen after the Fed meeting on Wednesday, depending on what kind of language comes out. That could be a short-term trend reversal on the charts, price behavior analysis. Now, have said all that. Good luck and good trading. Futures and options on futures may involve substantial risk and may not be suitable for all investors.